What do I buy and when? The answer, ARKK, and right now. What's up, millionaires? Alexander Victor here with another moment of financial zen. And if the stock market has got you feeling like you probably shouldn't have quit your 9-to-5 job, well, you shouldn't have. Nobody told you to do that. Nobody said it was okay. We already knew that things were overinflated anyway. So this is just a bump in the road. This correction you see here, we're moving in the right direction now, and I'm going to help you get there. If this is your first time here, welcome. If not, welcome back to Zinvest. This is my channel where we review growth stocks, give you price predictions, and explain the strategy on how these growth stocks can help improve your portfolio's return exponentially. Okay, growth stocks by far are the easiest way to invest, and this strategy is going to help you get your portfolio right where you need it to be. The stock market is on sale right now, which means you need to get out there and buy up these stocks. We don't see this opportunity but once every 6 months. You shouldn't be afraid of the falling prices, all right? We don't do that here, okay? Use this opportunity to buy those stocks, those great stocks at a low price, and ride them up. Today we're talking about my favorite ETF, ARKK. ARKK is an ETF which looks like a stock, performs like a stock, except it's much better than a stock because you're lowering your amount of risk that you put when you buy ARKK, an ETF, instead of a stock. So what's the difference between a stock and an ETF? I'm going to explain that for you. All right, imagine you have a sister and she asks you to watch her kids. Okay, you have the kids for the entire duration that she's on her honeymoon, right? And the kids ask you to get them some cereal. You ask them, what kind of cereal do you want? And they don't know, the one that mom gets, okay? So you go on a quest to go get cereal from the local grocery store, and you get to the aisle and there's a seemingly unlimited amount of cereal options. Now, you're stuck with a choice here, okay? You could choose one cereal and end up choosing the wrong one and risk having the kids bounce off the walls. You don't really want that. So what do? You look around up and down the aisle. With that aha moment, you finally found a variety pack, okay? So in this scenario that I presented to you, the cereal represents stocks. The variety pack represents an ETF. And so you're lowering your risk of the kids, which are your emotions, bouncing off the walls if you just get a variety pack, because they're going to find something that they like in the variety pack. Your emotions are going to be able to cope if the stock market goes wild for some reason. A lot easier if you are diversified. And when it comes to the diversity within your portfolio, it's much easier to just let the professionals do it, which that's exactly what runs this ETF. Let the professionals do it, and they're going to be able to put your money probably in better places than you can on your own without having to hire one independently to try to manage your money for you. An ETF is a bundle of stocks which you can own much cheaper than buying those stocks individually. Think of it like this. Walmart is buying stocks individually and Costco is buying an ETF. You're going to get the bundle. You can get a lot more stuff in your bundle and it's going to be cheaper overall. You're already diversified when you're buying an ETF. So just go with that if you're not entirely sure what to do. You don't need to hire a specific professional to manage your money for you. A lot of times when you do that, they're going to take your money, that financial advisor is going to take your money and put it to something after they convince you this is safer. It's actually going to get you a much less return. Check out this chart here. It shows you that majority of people there, because they have individual financial advisors, their returns are making about 6.5%, the overwhelming majority of the people. If you take it upon yourself to take a little bit more control of your investments, you can make a significantly higher set of return, like the far blue bar, which is showing a 30% annual return. That is very possible if you just take it on your own, okay? And take control of your own money. All right? If you take your money and you put it in places where you can manage your own risk tolerance, put it in a place like an ETF, which is already managed by financial advisors whose job it is to make you the most amount of money possible with lowering your risk. If you do that on your own, you can make a significant amount of money more year over year consistently without having to come out of pocket for somebody who's going to give you a smaller return. Okay, it's worth much more if you do it on your own just by buying ETFs. Because if, truth be told, if you went to a financial advisor and you told them, I want to make as much money as possible, and they'll say, well, the risk is higher, but I think I can do something for you. And they're going to take your money and put it in those ETFs anyway. Okay, so just go ahead and save yourself the pain, save yourself the extra money, and just put it in an ETF yourself. The best example of this is Kathy Wood and the team of Dragon Slaying Knights over at ARK Invest. When you buy an ETF, it's a little bit different than buying a stock. When you buy a stock, you're owning a portion of a company, right? And your portfolio can do good or bad based off of the performance of that specific company. Now, as I mentioned, when you buy an ETF, you have a whole bundle of companies in which you can buy that come part of that ETF. And so if one company is doing bad, it's not going to drop your whole portfolio as if it would if you just put all that same money into that one stock. So you're automatically diversified. It's just better to get an ETF. When you're buying an individual stock, you're taking a chance, okay? You're taking a chance of that stock not performing as well as the rest of the broad market. And you're taking on extra risk that you don't necessarily need to take, okay? If you put the money into an ETF, it's already managed for you by a team of really smart research analysts, which are going to take your money and make more for you based off of that. ARK Invest focuses on disruptive innovation. They were one of the first to get to Bitcoin. They were first to hop on a Tesla train before it blew up. So it seems like everything that they touch eventually turns to gold. The fund has only been around for 5 years, so generally not a lot of people know about it or trust enough to put their money there because they don't have a long track record. Now, if you understand how finance works, Wall Street really live and work off the history of a stock to properly value it, okay? They look at a portfolio, if the past 10 years of the portfolio on how it performed. So if you are looking at ARK Invest as part of your fund and you want to know if you should invest in ARK Invest, well, since they have only been around for about 5 years, they don't really have enough credit behind them for big money to really want to push into that direction. That's why a lot of people that are buying ARK Invest right now, or those young individual investors like me and you. The traditional approach of what Wall Street has used for many decades is old and outdated, okay? Wall Street used the statistics of sectors, markets, and global boundaries to rank their stocks, to see how they performed against other stocks. This model is old, and it's 2021 now. This model was made in the 1980s, 70s, and 60s, and does not work for the companies that we have today. If you were to take Tesla, which is an automotive company, but also they make batteries, and also they have AI, and also they have solar panels, and they have home batteries, and they have a whole lot of things that they're working in. You cannot rank Tesla as purely a car company because Tesla is so much more than that. So last year, when you would ask a fund manager, what they thought, what was their analysis of Tesla, they would tell you extremely overvalued, and they'll still tell you it's extremely overvalued because they're using these old models. Well, Kathy Wood and her team figure out how to properly analyze these stocks and show what their actual earning potential is, which is why their price predictions are so much higher than the competition. Trying to measure Tesla with the traditional vehicle market sector is like trying to cut grass with scissors. You're going to miss a whole lot, and it's going to take you an extreme amount of time to get the right answer. In Japanese, they say yokai na koto, which means this is a lot more difficult than it has to be. You don't have to do that. Just simply adjust your scales, adjust your measurements in order to get the answer that what it really is. Tesla is not a car company. It's more of a battery company that puts cars on top of their batteries. ARK Invest sees these deficiencies and capitalizes on it. ARK Invest has figured out how to finesse the momentum of these companies and capture them before they go parabolic, which got us all feeling like it's all good. The ARKK ETF has 56 very promising companies in its portfolio. Number one is Tesla. Tesla has many business models. Not only its car business model, but it has a battery business model, it has a solar roof business model, it has robotics business model, and it's built vertically. Everything is vertically integrated, which means they make their own stuff. Also in this portfolio is Square. Square helps small businesses process transactions without the clunky big machines that you used to see normally in the past decades. Those companies that provide those machines, they actually cost a lot. They take a significant portion of every transaction, but Square completely trashes that business model, and they create a much easier, much simpler transaction. Okay, they have these little devices which you can connect directly into a smartphone and handles those transactions for you. They also have a really nice platform that's easy to use for small business owners. Also, they are main proponents of the whole fintech craze. So eventually, Square is going to replace banks as we know it. CRISPR is another one that falls into this portfolio. CRISPR Therapeutics is gene editing. Pretty much, these guys have figured out how to edit our genes, take out things which are genetically wrong with us, and replace it with something better. Okay? That is going to be extremely disruptive in the medical community. And when we start seeing CRISPR actually being utilized, it's going to change the way that we do things. I've explained in another video, I'll leave that in the link at the video, but Roku is leading the way in streaming platforms. Okay, Roku has 50% of the market when it comes to streaming. And because they're not specifically attached to one company, as you know, Apple with Apple TV, they have their whole Apple products. You have Disney's streaming platform, which is, you know, attached to Disney's, and you can see where there can be a conflict of interest between Apple and Disney. But because Roku is willing to help everyone, instead of looking at them as a competition, they're looking more like partners. Teledoc is another business model which mixes technology with medical services. Teledoc lets you reach out to a doctor when you need medical services, and without the hassle of what you have to do, what we're used to in previous decades. Invitae is a company that would pair very nicely with CRISPR. Invitae takes a DNA sample and tests it for those genetic diseases so that you will know what, if you have kids in the future, what genetic diseases they may have, what genetic diseases you may develop down the line, so that in the future, if you wanted to get rid of those things, you absolutely could. Another one in this portfolio is Zillow. Now, Zillow, you probably know, is a company that allows people to look at the current prices for a house in a certain area. Now, that makes it extremely easy to value how much your home is, how much rent will be if you were moving to that area. Zillow is another company in this portfolio. Zillow is allowing people to look at the prices in the area in which they're trying to buy a home, or they already have a home, get accurate price values of their home and their neighboring home, and to be able to sell and buy homes on the website or to rent, to find some place to rent. Okay, Zillow is able to host these transactions on their website, and they're only adopting blockchain away from completely bypassing the real estate agency business model. This ETF has 56 companies in it that are promising, as promising, if not more, than the companies that I previously mentioned. They are for sure winners and will make you a lot of money for a long time. All you gotta do is trust them and buy them now. Let's take a look at where ARKK has been. ARK was able to match the performance of the S&P 500 from 2015 to 2017. then break out in the summer 2017 and gain distance high above where the S&P 500 was returning, all the way through the pandemic, where it absolutely just took off once people found out how powerful this ETF is. Let's take a look at my valuation. This chart uses the history of the fund to predict how well it's going to perform in the future. Based off what is considered normal for this ETF, it tells me when the fund is underperforming and when it's overperforming. And these lines tell me when's the best time to buy. Right now, this indicator telling me this is an absolute great time to buy. No matter how all this red makes you feel about buying and selling stocks at the time, the truth is the performance of these companies hasn't changed. And if the performance hasn't changed, there's no reason for the value of the company to decline, okay? Take a look at the long term. Focus on the long term when you're buying growth stocks, because over the long term, buying and holding in this strategy is going to provide you with the best return. If you came here for get rich quick stock advice, that's not this. This is buy and hold for the long term. Yes, ARK Invest is going to be more volatile than the S&P 500, but also you're going to get much higher gains if you take on that additional risk. What's happening right now is a rotation from the tech sector over to the recovery stock sector, okay? Now, if you look at the history of the recovery stocks, which are also known as value stocks, they don't have a high rate of return. So though this transition seems powerful right now, ultimately because of the history of these recovery stocks, they're not going to be as parabolic as the growth stocks. You should be buying growth stocks and you should be buying ETFs which represent these growth stocks. Over the long term, especially if you're a millennial and Gen Zer, you don't need the slow growing stocks because ultimately it's going to be a long time before you retire. If you are looking to retire sooner, you need an even more aggressive portfolio. So buying slow growing stocks over a long time isn't going to help you as much as if you were to buy growth stocks. This predictor automatically updates with the numbers just by using math to show you where it has been and where it is going. And even through this seemingly severe dip, the numbers are still promising. This is hands down one of the best places to keep your money. Take advantage of times like these. You don't come around but once every 6 months or so, okay? So take advantage of the time to buy these stocks low while they're on sale and ride the wave back up. You heard it before, buy low, sell high. That's exactly how you need to approach this, all right? I'll be honest with you, you don't have to watch the stock market every single day. You just need to buy once or twice within a year and just hold, okay? Just buy and hold. Buy consistently and hold it over a long period of time. When you do that, you pay less in taxes, you get higher gains, and ultimately, you're less stressed out. If you're already in ARKK, double down on this one. If you're not in, now's the time to get in. Thanks for making it all the way through, guys. I really appreciate it. Go ahead and take the time to invest in the like button, subscribe, and hit the notification bell for future videos. Also, I appreciate it if you share to let people know the information that I'm putting out, okay? So, should you buy? That's for you to decide. Do your research, leave your answer in the comment section below, and I'll see you on the next one. If you want to know how I got these numbers, go ahead and join my Zinvest Discord. You can talk to me personally, put your best stock picks in there. I'll go ahead and value it for you and let you know what I think, okay? This is a great opportunity. I'm also doing calls very frequently. So if you want to know something about another stock or a cryptocurrency, I will go ahead and do the research for you just so that you have a second opinion, okay? Don't forget, invest in yourself. Your future depends on it.